Otherwise, you can look for secondary entry after the 10 a.m. news. So typically, some sort of confirmation in the correct direction. And then once you can kind of see where price is aiming for, you look for either an inefficiency or for value gap, or even just a candle closure to enter. And we didn't get that same volatility. So if you look at the 9:30 equities open, we slammed all the way higher. DXY right at equities open, we didn't really move at all. We got a slight retracement there, but all of this run up was not inversely correlated. So DXY running up and ES basically moving up there. And then we have barely any movement with the equities open. So you can actually consider that as SMT divergence when DXY is not doing what it's supposed to be doing and the rest of the indices are. You can expect kind of like this pressure to build up. So in this case, DXY does not want to move lower. So instead, we're expecting when DXY wants to flip, whenever it may be, and move higher, that the indices will dump off aggressively. So if you can close really between this entire, or even past this entire gap, if we work into it, maybe fill up to the premium end again with a green candle and then trade back lower, that 10 a.m. news should send us towards the sell side. We have relative lows down here as first target. We do have a breaker in here. Potential entry here between 10 a.m. and, sorry, what was that, 9:55 and 10:05. Expect kind of a retracement into one of these two fair value gaps, and then we can trade back lower again. But also, this bisi was not delivered with your buy side, so you'd be looking for a trade up, at least from a wick to this up here, preferably, if you want really efficient delivery. Further, also liquidity, we got a pull down here. Let's look at the 5-minute actually. Oh, actually, we'll go back to the one and just watch this news drop. So, not a crazy amount of volatility. We needed to close through that bisi entirely. So, look for the short-term sell side. We got some down here. More obviously stacked below that. So, you're looking for 16025.5 if you can close through this entire gap here. Looking good. And there you go. Nice little run there from the sibi. Good, what, 20 points. So you could look for 38 points, dang. But see how it's much easier to wait for the news. We got clean respect of that gap prior to the news dropping, waked up into it. This inefficiency, though, we'll come back to. Waked up into it, closed below, waked up again, and started expanding lower, so you could enter anywhere within that candle, especially since we got nice displacement through the bisi there. So weakness in the market. That one's kind of a quick one to do, though. It's something that's more feel than it is just pure execution. Because when you see that news enough, when you're familiar with the 950 macro, what it's supposed to do, you can enter off that 10 a.m. candle like I've done before, or you can wait for the 10:01 like I was saying. So watch for potential retracement up into here. Let's look at the 3-minute. Here, I'll send you a screenshot of just a tiny one that I took. So on these high volatility days as well, it's very good to use low position size, kind of minimize the exposure, and minimize the mental capital you're going to have to use on these days. I don't know, man. There's your good all time fib, but you only use this as your price delivery target. 2 to 2.5 entry given, and within the same time frame we reach into 2 to 2.5. So it's still popping up there. So see what I mean? We didn't get that. That's like perfect. We have a slow grind up. Equity open runs up with the open, and we start trading a lot higher on all three of the indices, and DXY fails to drop lower. So that's your pent up pressure. Think about it like that. It's also technically SMT divergence. So we don't see DXY willing to drop lower, which means when DXY does want to climb, indices will see that larger expansion to the downside with the indices, and that's literally exactly what we got, right? We saw DXY start to reverse here at 945, 946-ish, and then quick expansion up And you can see the indices as soon as we hit really 946-ish. All three of them were starting to drop off, right? NQ is kind of leader of the party here. Got that entry here on the sibi, and then YM dropping off right at 946, right at the high. We're going to turn up into premium. Here's your premium line. You could return up to here because we still haven't. See how this bisi in here, we have sibi delivery, but this line I've dragged from this bisi premium end. There's no additional buying in here. So we would like to see buying up to here at least on the 1 minute. On the 5 minute, you see we'd like to see buying basically all the way up until the high end. I don't think we'll get that. And nice expansion off that. So I'm going to be hands off until 10:30. I don't care if we dump another 100 points down to the sell side. I'm not going to be taking a trade from now until 10:30. Even if it's a clean market maker sell model all the way there, completely hands off. So we'll just be gathering information from now until the entry time. Look for this X line as a potential for price to retrace within premium, internal range liquidity sweep, and apparent daily range retracement into premium. So if you're familiar with this, that typically is a good setup for reversal. So let's see how we want to react to this sibi. This sibi is kind of the line in the sand, I think. So, I mean, preferably we leave these as breakaways. We don't want to see a return really above, I would say above 16,112. Let me screenshot this. In this case, I'm not favoring longs just because I don't want to be, unless you're just taking a quick 20. But I don't want to be in long here. Trades up and a little bit further into this sibi and then we reverse. Preferably I'll be looking for shorts. What I want to see is we turn up to here, maybe tapping this X line with the wick, trend back lower below this bullish order block. Maybe tap into it off of this for value gap where we see a nice retracement back into the change in state, trade back lower, down into the regional consolidation in here. So I'm looking for a fractal market maker sell model. That's preferred. If we get that and then the 1050 macro aligns, that'd be perfect. There's your X line fill. Perfect. So now watch how we want to react. Very bullish DXY. Extremely bullish. So you could be looking for downside now. Watch this up closing candle. If we can close below it, it's a high probability order block, right? Fill the fair value gap. We have context around it. So narrative would be up into premium, fill the X line perfectly, right? Trading back lower, we have a market maker sell model that we're starting to form, and we're trying to break out. I'm watching this up closing range right in here. If we can continue to wick below 50% of this, so candle buys for the most part respecting mean threshold of the order block. This here, if we can close below, would be a propulsion block. We got old selling right in here. So candle closure is important. So if you were looking at the market maker sell model, this would be your first partial, then discount. I don't think that this high should be pierced if we want to return to sell side. That's why time is important though, right? Everything outside of it, you're just gathering information and then you wait for time and hopefully you can get your entry off that. Let's see though how we want to hold this order block. We did close below it, the entire wick and everything. So preferably that's also a up closing range you don't want to see violated. 1050 approaching. So preferably you'd like to see displacement through these gaps, especially in the 2 minute, things like that. Held that order block though, right? Candle wicks, wicking up into that, staying below. Starting to see some expansion out of it. Could also be your first partial if you're looking. Got sell side down here. Look at the precision there. We got wicks down into that 2 minute gap. We closed below it, below the old selling, and candle body not returning above the old selling, candle body not returning above the old selling, tap into the bearish order block, and we dumped off. And there is your short-term sell side. Pretty easy stuff, right? So was favoring, what did I say that? 1033, favoring a fractal market maker sell model within this price leg. That was the only thing I was going to trade. Started to get that indication, closing below these order blocks, respecting the threshold there, closed below the order block, tapped into it. So that's where I entered short, and then took partial at the 20 points, and then at the entry range liquidity right here, you can see starting to retrace after that.